What's good, guys? Welcome back to my channel. It's your boy Marcelino. Thank you so much for tuning in again. Welcome to Traders Talk, guys. It's something new that I'm starting. So what I want to do in Traders Talk is just a small 10-15 minute chat with you guys, okay? Just a chat, bringing up concepts and things, okay? Guys, so I want you guys to comment down below whatever you guys want me to talk about within this Traders Talk for next week, for the following week. Every Tuesday, we're going to be bringing Traders Talk. Today, what I want to be talking about, guys, is myself, discipline. What do you do when you break rules? What do you do when you're not disciplined? And then also, one commonality among successful traders, guys. That's something that I desperately want to talk about. So, guys, just a bit of a backstory of how I came up with this. This morning, usually when I trade from about 7 o'clock till about 9:30 in the morning. That's South African time. So if you're doing that in London time, from 6 o'clock till about 8:30 London time, okay? So usually I'm awake at about 5 o'clock South African time, South African Standard Time. I'm usually awake about 5 so that I can meditate, so that I can read a book, and then when 7 o'clock comes around, I've looked at the charts, I've looked at which way I want to be trading in. I'm only going to be trading in this way. I'm set up and I'm ready to go. Okay. However, this morning, I have no clue what happened this morning. I don't know if it was the fact that yesterday was my first day back at gym, if I was a bit tired, but I completely overslept and I woke up at about 8 o'clock, guys. This is like an hour into my trading session. I only have, so I've really narrowed down my trading time so that I can trade less. So I'm waking up, it's an hour into my trading session. I'm looking at the pairs that I trade and I can see it's moving and there's an opportunity for me to take a trade. However, I woke up so late that I just told myself, look, just step away. Don't even look at the charts. Don't do anything. Just get done, get ready for gym and go gym. Take yourself completely away, because you know more often than not you're probably going to lose the trade because you didn't do the routine that is in your trading plan. You didn't do your pre-trade routine. So in essence, what I did when I woke up late was I broke my trading plan, because within my trading plan I have the times that I need to wake up, I have the things that I need to do ahead of trading. And that to me just showed me that, look, you really, like, you as a trader, you really have to knuckle down and or double down on yourself, because you are the first and last person that decide what's going to happen with your trading day or what's going to happen with your business. If you're going to just treat it as something that's a hobby or something that is not worth your time, waking up whenever you want to, and uh treating it like it doesn't deserve all of your attention, then that's what you're going to get out of it. And so what I did was, my trading plan has a couple of what I like to call as disciplinary actions, so that I won't do that or break rules again. So one of them being, and I don't know, you guys as traders, even as people just in general in your personal life, you can implement this. One of them are writing a 500 word writing a 500 word document out and then exporting it to PDF if you want to. But writing a 500 word document out, or even in your notes on your phone, depending on where you want to, but as long as it's 500 words or more as to what happened, why you broke that rule. Because ultimately, people think that your trading plan is only about trading. Your trading plan should be about every step of the way, what you do before you trade, what you do while you are trading. And you should have rules to everything. Post trading too, you should have your rules where you are recording things, and if you break those rules, you need to be able to ask yourself genuinely what happened, why did you break those rules, and then you start typing. And that's a way where you, because in general people don't just want to be typing about certain things. So that is one of my disciplinary actions. And then another thing would be just taking away something you like for the rest of that day. So just something simple, like I really like my coffee, and if I break a rule tomorrow, like for tomorrow, for instance, I can't have any coffee because of me breaking that rule. It's just something small so that you can actually feel like you did something wrong, and you yourself as a trader need to start implementing these type of things so that you can feel that you have kind of broke a rule within the company, because this is your company, it's your business. You have broken a rule and you are being basically disciplined, and you being put in a timeout in the corner over there. Go stand in the corner and take some notes. Okay, that's what you need to do. Then in terms of actually getting to what I wanted to speak about, traders talk, guys. What is the most common factor between successful traders? We're always looking at mistakes, we're always looking at why people are failing, but what is the most common factor about successful traders? So guys, there is a couple of books that I want you guys to read. I placed it in my Telegram. You guys can check it out. The Telegram is most probably going to be in the description below. There's 4 books that I want you guys to read. There's the Market Wizards, the New Market Wizards, the Disciplined Trader, and then Trading in the Zone. So Disciplined Trader and Trading in the Zone is by Mark Douglas, and then I'm not too sure who's the author of the Market Wizards and the New Market Wizards, but those books are definitely a must read, guys, going into third quarter. Okay, if you haven't read it, do give it a read. However, the Market Wizards, what that is about, is basically about the author interviewing successful traders, and I found that there is one thing that all of these successful traders are consistently saying, and that saying is, let me just make one screen here for you guys and I'll type it out. Okay, that saying is, cut your losses and let your winners run. Okay, this, guys, this right here, let me see if I can actually increase the to 28. So this saying right here, cut your losses and let your winners run. It's the most consistent thing throughout all 4 of those books. This one saying, it's repeated by every one of the successful traders in the Market Wizards, and then this is so repeated by Mark Douglas in those 2 books that he writes. And guys, I want you guys to really think about this. Why do successful traders always say cut your losses and let your winners run? Ultimately, what I did after I saw this pattern throughout this month, I then went ahead and I went to go research why most retail traders fail and why they fail in challenges at prop firms, why they blow in accounts. And guess what it is, guys? Guess what it is? Boom, 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 boom. You guys thought it correct. It's the exact opposite of this. Stop loss, getting hit, not cutting your profits too early, not letting your winners run, and then also over leveraging or just going ham on your your lot sizes. So guys, there's a direct, there's a honestly, there's polar opposites of what successful traders are doing and what retail traders are doing. And that's why people continuously, or retail traders continuously fail, because number one, they are not cutting losses. What do I mean by cut losses? We all have this saying that we have heard before. Doesn't matter if you've been trading for 3 months, for 1 month, for 3 years, for 5 years. We all heard the saying before: accept your risk. What that means is, once you place a trade, for instance, once you place a trade right there and you say 20 pip stop loss, for instance, you have a 20 pip stop loss, you're going to apply 1%. You're saying, I'm accepting this risk, and if it hits my TP, it's completely fine because I accepted the risk of 1%. But what I'm saying is, yes, you accepted the risk, you fully understand what is going on. However, that's contradictory to what the successful traders are saying. The successful traders are saying, cut your losses So they saying don't let your losses run until the full 1%. If you have accepted the 1%, don't let it run until the full 1%. If you know the price is starting to break out here and you can see a clean, strong breakout on this next candle and it's closed, and your data is also saying that after a price moves above 50% of your stop loss and prices in this area, that is more often than not going to hit your stop loss. What's the point of then saying, okay, no, let me keep the trade? Let me keep the trade and hope that it's gonna go into profit. Let me hope that is gonna hit my TP of 1 to 2. Now you hope trading, guys. You trading on hope. You're not trading on numbers. So, guys, this this concept, I kid you not, this concept will really, it will elevate your trading. After I learned about this, I took the whole month of June just to, I didn't even focus on letting my winners run as of yet, just to say I'm cutting my losses short. And I can tell you that although I lost quite a bit this month because of changing the way I trade and because of the cutting the losses, obviously, I can tell you for sure that I my equity curve is looking extremely good, guys. It's looking really good because I'm cutting my losses as soon as this 50% of my stop loss. I'm cutting it. I don't care what happens after that. I genuinely just say, okay, no, this is a loss for me. So in that way, if I'm only risking 1%, ultimately I'm only ever losing 0.5%. But then when I win, I'm winning 2%. So that means 2% or more. So that means at the end of the day, I'm not trading winning 2%. I'm winning double that because I'm only risking half of what I'm actually risking. Do you guys understand what I'm saying? So that's that's the theory behind it. That's the way it works, guys. That's the way people people get a continuously or an uptrend in equity curve throughout the whole year because they continuously cutting their losses, and then thereafter, if you have the part of cutting your losses under control, now what you can do is you can work on letting your winners run. What that simply means is that you need to go do some work and see what happens if I actually let my winners run. If I have let's say a 5 pip stop loss and it goes to 10 pips, however, it's just continuously moving and it falls and it falls and it falls. And all of a sudden you look up and it's at 50 pips. Now you have a 1 to 10. Like, let those things, let it play out and see what your numbers is as long as you reducing your risk and you're cutting your losses. What that will then mean when your winners start to run, you're not just covering losses all the time, but you're actually making gains. And what will happen to your equity curve is this, guys. Let me see. I'm just going to be working on uh, a 1 to 2 risk to reward, right? So you're risking one, cutting your stop loss at half, but when you win, you win in 2%. Okay, so you win first of all. Let's say, okay, no. Let's say the start of the month come, you hit a loss, you hit a loss, you hit another loss. That's 3 losses in a row, but all 3 of those losses are only 0.5 because now you are actually cutting those losses, and now you have a 3 losses, but that's only 1.5% worth of your account. So now you hit a win. What that means now you are up by 0.5%. So you hit a loss, 0.5%, you hit another loss, and then now you go up again and you win. And then who knows what happens next? You win again. You're up now by a significant amount. So here you are at minus 0.5%. You then up by 1.5%. You now up by 3.5% for the month. And that's what happens with your equity curve when you start cutting your losses short. Now after this, you can have a ton of losers. Like, you can really lose 4 of this and then you're only covering one of those wins. Then now you can lose another 3. So that means 4 plus 3 is 7. You can catch a losing streak of 7 trades, guys, before you actually get to break even. So I hope you guys are understanding this concept of cutting your losses short. And then also after that, once you get that in hand, let your winners run so that you can actually capitalize on the bigger moves when the market do start moving and it do start actually moving with momentum and there is volume in the market. Like last week, I think this week there might be a bit of volume so coming into the market. So yeah, guys, I do hope that uh, this has been informative. I hope that you learned a bit. I hope that your equity curve will start to move consistently to the upside and have an uptrend the same way successful traders have. And I don't think a lot of people speak about this because when they do learn it, they don't necessarily want to teach it and they don't want they kind of want you to pay for it. And that's why you'll see that a lot of people are creating courses and those type of things. But guys, ultimately, all successful traders always say the one commonality between them all: cut your losses and let your winners run. Okay, guys, let me know down below in the comment section what you guys thought about today's traders talk. Let me know exactly what you want me to talk about in next week's traders talk, guys. Have a wonderful day further. I hope that this trading week today or the trading week for the rest of the week is profitable. I hope if you do have a couple of losses for this week that you recover those losses and you make profit. If you are at break even or you haven't taken trades as of yet, I hope that it's a great week, guys. Thank you so much for tuning in. Do hit the subscribe button, hit the like button. Peace out.